Most Western traders are just playing the wrong game. Wall Street keeps you focused on US markets, pushing narratives like tech stocks will lead, always. The Fed will save the market. China is uninvestable. Okay, but let's consider this. The US national debt just exceeded 34 trillion. The Fed tools are limited. The stock valuations are literally mirroring the dot-com bubble. The global markets are completely moving away from the US dollar. Okay? Just consider this. Major investors aren't even sticking to this script. The hedge funds are increasing their exposure to China. The Middle Eastern investments is flowing to Asian infrastructure. Singapore is basically the new hub for wealth storage, completely surpassing Switzerland. Everybody knows that. So let's look at the common beliefs among these Western traders. Here we think China's too risky. The US stocks will always go up. I'll just buy the dip of the S&P 500. You remember Japan in 1989? The Nikkei crashed 80% and decades later didn't recover. The US is showing basically the same warning signs. The S&P 500 dominated by the Magnificent Seven. That comprises 30% of the index. Valuations are stretched with PE ratios at pre-crash levels. And we got retail traders that are just way too bullish, which is basically a precursor for a market top. Conversely, China's stock market is undervalued. Hong Kong stocks are trading at 50% discount to historical norms. The Chinese stocks are priced lower than US small caps. And China's GDP is continuing to grow at, 5%, while here in the US, we're at complete economic stagnation, right? The most profitable trades in the 2020s are not here in the United States. It's time for you to consider where the smart money's going and explore opportunities beyond that traditional narrative. If you want my free report on Asian markets, DM me Asia.